Robert Kiyosaki explains the current shocking situation of NIO stock. NIO issued a strong statement. It is slowly picking up after experiencing some immense weakness over several months. But the stock trades nearly 65% lower than its 52-week high price of $55.13, implying that the market is still underestimating its potential, despite the challenging macroeconomics outlook, although NIO stock remains up by over the long term today. Hello everyone, and welcome back to Stock Market News. Today, we are going to talk about stock markets and the dose of stocks if you're interested in everything around the stock market. Don't go anywhere, and make sure you watch this complete video as it will be fascinating. But before that, please hit the bell icon and subscribe to the channel to get every single update about the channel. According to Robert Kiyosaki, the NIO stock price will shortly skyrocket above $1,000. The recent market turmoil has shifted focus away from some of the major teams that were assembling last year. Growth in the electric car business, for example, has been limited by supply chain restrictions and increased COVID infection in China. However, a major fear over Chinese stocks listed in the United States may have passed, with Beijing prepared to meet a crucial demand of U.S. regulators. While shares of Chinese electric vehicle maker NIO have plunged more than 40% this year, most analysts remain optimistic about the company's long-term prospects. NIO issued an emphatic statement following record deliveries the first quarter. Additionally, NIO is slowly recovering after experiencing immense weakness for several months. However, the stock trades nearly 65% below its 52-week of $55.13, implying that the market's still underestimating its potential, despite the challenging macroeconomic outlook. However, NIO stock remains a long-term buy. Shanghai, for example, one of China's most populous cities and significant manufacturing centers, just saw the greatest outbreak of new coronavirus since 2020. There's also the Russian invasion of Ukraine, in which China stands firmly behind its friend, despite regulatory hurdles that its industries confront in the United States. Tencent Holdings may face a penalty for anti-money laundering crimes, but the company's short-term shop interest in NIO should not prevent debtor investors from going long. Let's take a closer look at why your stock is still a buyback where it belongs, although you stopped last year. With a bang, the EV giant doubled its total revenue by 122% to $5.67 billion in the fourth quarter alone, notching up to $1.55 billion in revenues, primarily attributed to robust domestic demand. However, due to the Chinese New Year and its peer witnessing a slowdown in deliveries this year's first couple of months, the EV giant bounced back in March, delivering a record 9,985 vehicles during the month, the vast majority of which were electric vehicles. It has started shipping its latest passenger sedan, the ET7. With the debut of the ET7, we are likely to see a shift in the company's sales mix, as well as a major boost in production and deliveries. Overall, NIO delivered 25,768 cars in the first quarter of this year, an incredible 28.5% year-over-year, and its first quarter results ended up at a higher end of the delivery guidance number of 25,000 to 26,000 cars for the more total deliveries as of March. They were at 192,838, an extraordinary number considering how quickly that number has grown in recent years. Saving thousands of dollars by purchasing cars without batteries rather than paying a monthly subscription fee to replace and charge batteries on demand. According to the website dedicated to new energy vehicles, NIO had 864 battery exchange stations and 762 supercharging stations in China as of April 18th. After CNF, NIO's agility was on full display when it quickly listed that it stuck in Hong Kong in early March as the threat of having Chinese stock delisted from the U.S. grew stronger, and most importantly, NIO just said it could break even as early as the fourth quarter of 2023 and deliver its first full year of profit in 2024, in an industry where profits expected to be minimal. Whereas boosting production profitability appears to be a difficult undertaking, NIO appears to be confident in its abilities. Kathy Wood is interested in NIO stock and share buys and has a price target of $70, which implies a gain of about 120% from the current price of about $32. NIO increased its deliveries by more than 100% in 2021, but the stock fell as investors worried about increased regulatory risk associated with the listing and Chinese market oversight. You are then focused on the fundamentals rather than the potential for regulatory trouble. He mentioned 8 catalysts. The price of NIO stock is rising. That's all for now, gentlemen. We'd also want to emphasize that this is not a channel for financial advice, and we don't ask you to invest in any company. Instead, we encourage that you do considerable study on the topic before investing in anything. Tesla is the largest holding, accounting for 7.54% of the ARK Investments family of exchange-traded funds as of March 28th, although that is after Cathie Wood sold nearly 146,000 Tesla shares on March 25th. The previous time she sold Tesla shares was in January. What's more interesting is that she purchased NIO stock for the first time on March 25th, the same day the ARK Autonomous Technology and Robotics ETF recorded a purchase transaction of 420,057 NIO shares. While reducing her Tesla investment does not necessarily imply that her belief in the stock has waned, the fact that she purchased NIO equities for the first time merits a lot more attention from investors because it confirms her belief in the Chinese EV stock. Tesla, on the other hand, just increased the price of its EVs twice in 2 days. More significantly, NIO remains dedicated to launching 3 EVs this year, despite the hurdles. So far, the company's on schedule since deliveries of its flagship car, the ET7, have begun. In the next weeks, NIO plans to introduce its first SUV, the ES7, followed by its midsize car, the ET5. NIO's revenue should rise as it extends its product offering. With 91,429 automobiles shipped, one NIO produced $5.6 billion in revenue. NIO stock, a Chinese premium electric vehicle producer listed in the United States, has plummeted around 7% in the last week, outperforming the S&P 500, which has been approximately flat during the same period. So what's the reason behind the recent drop? The failure to reach an agreement on the Build Back Better Act, which included legislation incorporating purchase tax incentives, harmed EV stocks in general. Separately, the stock has been dragged down for some time by broader selling pressure in Chinese American depository receipts in the aftermath of D.D. Chung's announcement that it would delist from the New York Stock Exchange less than 6 months after going public, citing regulatory restrictions. However, NIO's had a few positive developments in the recent weeks. The business debuted the ET5, a new midsize luxury vehicle, during its NIO Day event. The vehicle is projected to be on sale in 2022 with a starting price of roughly $40,000. NIO also announced that the delivery of its new ET7 sedan will start in March 2022. So is it more likely that the stock will fall further in the short run or that it'll rise? According to our machine learning study of stock price movements over the previous 3 years, NIO stock has a 59% chance of rising in the following month, which is 21 trading days. NIO's already expanded beyond China, intending to approach Europe, one of the world's top EV markets, shortly. This year, NIO will reach at least 4 European countries, and in the long run, NIO intends to establish a mass-market brand to produce affordable EVs ranging from $30,000 to $50,000 per vehicle. NIO's growth potential is huge as a startup, with its sights set on 2 of the world's major EV markets. With its battery-as-a-service program PACE, which gives potential clients, NIO has also strong competitive advantage over its competitors, which might give it an advantage, especially during current inflationary times. According to William Lee, NIO plans to break even in the fourth quarter of 2023 and earn its first annual profit in 2024. Let us know what more updates you need about the stock market in the comments section below. The price of NIO stock is rising. Hey, that's all for now, gentlemen. We emphasize that this is not a channel for financial advice, and we don't ask you to invest in any company. Instead, we encourage that you do considerable study on the topic before investing in anything. Hey, please subscribe to our channel and make sure you give this video a thumbs up.